Good evening, everyone. This is Henry Gambell with simplertrading.com, and in tonight's free video, I wanted to recap a few of the ideas that I shared with you in a free video from a couple weeks past and how they have really started to come to fruition. But in those free videos, I was giving you two symbols, and I was trying to emphasize the idea of stepping away from feeling like you have to choose direction and instead focus on large psychological values into a witching expiration. There's a lot of kind of bullet points there that I think you can really put into your notepad and carry with you for the rest of your trading career. And again, that is to say, next Friday is the witching expiration, which we only get 4 times a year. But when you see all of this just really brutal selling and you get down into an area like 500, this was the point in time where we were discussing maybe you look at that from the neutral perspective. And as we sit here, on Thursday afternoon, the premium of those short straddles has come in quite well. So that's the first example where a lot of noise and admittedly, a little bit of heat down here into 460, but you want to revisit these ideas and see if they are really paying you, and Nvidia fits it to a T. The other is Peloton. Again, just taking these, what are the key points? So if you didn't take them this round, you can apply them in the next session. But you're heading into that witching expiration, which is going to tend to be kind of choppy and take advantage of traders on mostly those that are just buying calls and buying puts and chop them up. But you see this down into the big psychological value of 100, the rising 200-day moving average, and this one was mostly heat on the call side. But then here we are 2 weeks later, very close to that big psychological value, and mostly just a premium decay type trade. So it's nice to see those come through and not have to worry about too much about direction. If you do want to talk about direction, the next thing I want to show you is the potential of the put call ratio helping us find that value. Now you can use these in a lot of different ways, but what I'm making note of here is what was the value when we had this flush, and especially this day here. I believe it was the 4th, which the high put call reading came 1 day later. But look at how you're getting this flush, pretty much the maximum panic before preceding the big rally. And on that day, the put call ratio made this spike high. So that closing value of 0.71, the intraday high of 0.74, and just look for something like that again. That when we do start to sell off, if this reading can start to get back up into this vicinity, that would show us that everybody's panicked enough to maybe put in a low in equities, and that's one thing that I'm going to be carrying forward with the analysis of the individual charts. So I hope you find that a helpful addition to your trading in the next couple of weeks, and we'll see you at the next free video.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me